Morning folks, super quick update on natural gas. We're still holding the support here on the 4 hour. I posted the weekly chart on Twitter just a few minutes ago. This is what it looks like. And I asked people, what do you think this means? And basically what we've got is a few things here. We've got the channel bottom. We've got the 50% Fibonacci. That's this pink zone. Let me zoom in a wee bit further. So there's the channel bottom. There's the 50% Fibonacci. We've got the 50 period moving average coming down, and we're holding above it, even though it's angled down sharply. Technically, we're still above it. And then this green one is the 20 period moving average, and that's actually crossing up over the 50 period moving average, forming a moving average crossover. Now, I don't normally like those or trade with them or pay much attention to them at all, but when they enforce my own case and my own conviction, in other words, I'm looking for confirmation of my trade ideas by using anything I can grasp at. It's not quite that bad. We do have a crossover though, technically, and we are above the 50 and we're still below the 20 period moving average on this weekly chart. But going back to the 4 hour chart, and I'll tell you what my position is. So we're long at 288. We got rolled over, if you remember a few days ago, we got rolled into the 288 price. Perhaps I should just switch to the 15 minute just to show you where that is. I did put this in the last video, and there's the rollover gap right there. Let me sort of zoom in. So we got rolled out here at 274. We got rolled in at 288. So that's the price that we're in at. And going back to the 4 hour, you can see we're not far from there. We're at 285. There's the 20 on the 4 hour. There's the 50. The 100 and the 200. We want to get up into those moving averages above the 20, then above the 50, and above the 100, then above the 200. We want to close above those moving averages, not just pierce them and drop back down, but we want to close above them. So far, so good. I think this dip down here may have just been a false break. I'm going to link to my last video on this where I actually illustrated my trade ideas. And that was to put a trade on at around about 285 at this inverse head and shoulders, left-hand shoulder level. We dropped down a bit below that to 276, 277. But I said I would put my stop loss beneath the potential head of this inverse head and shoulders pattern. So I'm going to try and redraw that for you on the 4 hour chart using my mouse. So forgive me if it's a squiggle, but there's the move down, then the neckline, the head, up again, and then this one's a little bit too low, and then there. So it's a terrible drawing, I know. But there's the sort of move down, there's the head, there's the left-hand shoulder, there's the right-hand shoulder. It's a little bit skew, but we're trying to form some sort of shoulder on the right-hand side there. I'd give this about a 60% chance of winning, 40% chance of losing. So pretty close to 50-50 really. Doesn't really matter because we're in. And if we drop below the 2.7 level, then I'll be looking to hedge this entire position. But we're about 2.5 or 3 cents out of the money right now. So really, it seems as if nothing's happened during the first part of this week. We're back to more or less where we were when we started looking at potential areas to buy. So there you go. Good luck with natural gas and all the other instruments you might be trading. Have a great trading day. If you enjoyed this video, please give it a thumbs up and consider subscribing to the channel. Really appreciate it. Take care.